Good afternoon, Lagos. This is The Discourse. It's been quite a while you guys have heard The Discourse play on your favorite radio station, Classic FM. It's been a couple of months. The Discourse has been off air. But I'm truly excited that it's back on, that I'm also going to be a chaperone in the next couple of months. It's been truly an honor hosting The Discourse. And, it's going to be my job to make you have fun every 2 p.m. on Sunday, bringing you the most insightful, the most brilliant, the most interesting guests that will make your Sunday afternoon blissful. I'm going to be excited now to introduce our guest this afternoon. So, joining us this afternoon for the conversation is Mr. Olu Akanmu, who was until recently the president and CEO of OP Nigeria, one of Nigeria's largest fintech platforms. Before that, he was the executive director, retail banking at First City Monument Bank. He was also chief marketing officer at Airtel. Before that, he was general manager, consumer marketing at MTN Nigeria and client service director, at Insight Communication. He was also chief operating officer at Society for Family Health, which I think is an NGO, one of the most famous NGOs in the country. So good afternoon, Mr. Olu Akanmu. It's a pleasure to have you on the Discourse this afternoon.
Good afternoon, Ayo. Good afternoon to your listeners. Thanks for the invitation.
Yes, it's a pleasure to have you on. Today we're going to be talking everything from fintech to banking to leadership, much of which you have acquired, through your years of experience, leading very senior roles in various corporate organizations. And we're going to be touching a bit of governance. But like I always like to do, I always like to start, by talking about who the person we're talking to is, so our listeners get a feel, of who you are. I know you were born and raised in Ibadan, your state. Tell us a bit about your growing up in your state and perhaps the values that you picked up in Ibadan that shaped your worldview and molded you into the person you became today.
Thank you, Ayo. To connect what you read to the previous, my background is typical working class, Southwest Nigerian family, where the values given to you by your parents are largely about what we call Omoluabi, character. Remember the son of who you are. Reputation matters. But I think in connecting the story, my story is very typical of a whole lot of typical working class families whose second generation have had very significant social mobility. And in putting this kind of story today in context, we all benefited from very good quality public education, irrespective of who your parents were at the time. You will be able to fulfill your true potential. In putting that story today, I think what is important to reflect on is that if many of us were to be born now in similar circumstances, we have had the same kind of opportunity. The circle of prosperity in Nigeria has become more narrow. When we were growing up, the circle of prosperity was expanding, and a whole lot of people moved into the middle class. And those are important reflections. How do we get back to what the founding fathers of Nigeria bequeathed to us in terms of an expanding circle of prosperity, massive investment in young people and public education that gave everyone a fair chance to make it. You mentioned things that important things, events that shaped one's value. I mean, related to that, I will remember the 1979 elections, those UP and MPN elections.
Yes.
How our parents massively queued to vote. And what was important to all of us who were to the young people who were just in school at the time was the values of who they voted for Obafemi Awolowo in the Southwest was about common good. The same thing about the chance for everyone to fulfill their potential. Growing up, going to Ife as a student, those kind of values about common good, equal opportunities has over informed my view of life and the way I see business should be run, not just about profit, but also impact on society.
Yeah. I mean, I like the fact that you touch on the importance of public education, because it seems that governments of today have completely outsourced their responsibility in educating the public and, more importantly, in providing that social ladder where young people can climb. Right. People graduate from school today. I talk about this every time. A woman who fries akara down the road struggles to send her child to school, who then graduates and then comes back to join her selling akara, which it just shows that the ladder with which young people are supposed to climb have just been completely
kicked off,
pulled away from them. But you went on to study pharmacy in University of Ife, and something always strikes me, about OAU, and perhaps you probably have the answer to that, because I think in the 60s and the 70s, Ife was like, the hotbed for cultural enthusiasts, when the likes of Chief Wole Soyinka was present. Professor Soyinka was at the time. A lot of it was some sort of a cultural alliance happening in Ife at the time. And then if you looked at the 80s and the early 1990s, there was a lot of activism. You had most of the firebrand journalists who led, the news magazine and all of that were students from Ife who led that democratic charge against military dictatorship. But more recently, Ife has become some sort of a tech hub where you have one of the finest tech talents emerging from, Ife, Tosi of Money Point. So many CEOs of leading tech companies now graduated from Ife. And I was wondering, what water do you drink at Ife that produces such remarkable tech talent, such that even Steers Business, a reputable platform, said that 25% of the tech funding, really comes from, students who had graduated, tech startups, from students who had graduated from Ife. What is it about Ife that is producing this remarkable tech talent, this pool of unbelievable talents that we see everywhere?
I was at Ife, the University of Ife, 81 to 85. And I think a motto of the university at the time was learning and culture. In my particular context, I studied pharmacy, but I learned more outside the classroom than within the classroom. By the time I was graduating, I was a complete student. I was very active in the students' movement. I was very active in the student radical movement. We didn't call it inclusive society at the time, but it was the same principle about how society will work for everyone, and everyone will be given a fair chance. So you had a lot to learn that makes you a critical thinker outside, within your classroom, and outside. One of the things to also reflect on would be whether university education continues to be that. Whether we are producing generations of problem solvers rather than just people who are regurgitating their learning. I think that would be what defined Ife at that time. And it's great to see that even in the motto and the song of the university, it's still embedded in it that element of radical rebellion, don't accept the status quo, which is important to question. Is a bedrock of innovative thinking. Why should things be the way they are, especially if it is not inclusive and good for everyone? And it's great to see different talents, different generations have been produced, but there's still a whole lot to do because standards are falling significantly since that time, and we have to fix public education. University education is one of the things we have to fix in terms of giving more young people a fair chance to fulfill their true potential.
I mean, it's interesting you talk about, talent and public education, because I was going to ask you, you sort of crisscrossed from, pharmacy to banking to tech to marketing and advertising at some point. even to doing NGO, and now you're in the academia. What skills really did you pick up, perhaps in your time in the university? What skills have allowed you to sort of crisscross industries so seamlessly that you offer a range of value across these various industries? So a young person who's in university now, probably studying pharmacy or pharmacology or whatever they're studying, what skills should they be looking at building on such that they can move across industries and still remain relevant and continue to contribute and add value, across the industries that they find themselves in?
Yeah, thank you, Ayo, for those series of questions. I talk a lot about this when I talk to young people, and I even have some podcasts where I've talked about it. When I look back, say you don't understand life unless you look back and connect the dot. The connecting dot in the things, in the way in which my career has evolved is what I will call continuous and adaptive learning. The first thing that life opportunities will never present themselves to you the way you expect. The last thing I expected when I was graduating was that when I became a pharmacist, I worked for Glaxo. The dream you had at that time would become CEO of a pharma company. The last thing I would have thought about was that I will ever do telecoms or banking or fintech. But I share with young people what we are seeing today in Nigeria in terms of forex FX devaluation has happened before. When I was in Glaxo, Naira, during Babangeda's time, I was driving from Lagos to Benin City. The price list of Glaxo changed 3 times on the journey between Lagos and Benin. And that meant medicine became more expensive, the pharma industry shrank. When the pharma industry shrank, opportunities became limited. And I was a middle-level manager in the pharma industry. I had to adapt my skills to other industries. You call it pivot now, but what I describe it is the principle of building adjacent learning to your core. When I was in the pharmaceutical industry, pharmacy was my core, but I learned marketing as an adjacent knowledge. Now, the adjacent knowledge that you learn, if you are not a silo learner, can become your biggest opportunity to expand your career and give you a knowledge bridge to cross the new territories. That marketing that I learned in the pharmaceutical industry, which adjacent to my core as a pharmacist, gave me the bridge to cross into FMCG marketing and advertising. That marketing enabled me to cross into telecoms from marketing. When I was in telecoms, marketing was my core, as joining as market communications manager at MTN, becoming general manager consumer market over time. But I learned retail, how to build consumer franchise at scale. That retail that I learned, which was an adjacent skill to my core in marketing, became the bridge that enabled me to cross to banking, to join retail banking. When I was in retail banking, as director of retail banking at Bank PHB and FCMB, I had to learn technology, because when you are scaling retail, you have to use tech. Therefore, I have to interface with tech people. What are you guys talking about? That the platform is down, all those issues. Therefore, I learned tech. So the tech that I learned, which was adjacent to my retail knowledge in banking, became the bridge that enabled me to cross to fintech. So I think the lesson is that constantly, when you are a young person, the opportunity of life will never come to you the way you expect. Life is about continuous and adapting your learning to the opportunities that are presented to you. That is my story. And I commend that to a whole lot of young people. You have to constantly learn and adapt.
Talking about constant learning, there's this fancy tool now called AI, right? That is eating a lot of jobs for breakfast these days. Do you really worry that, when you talk about adaptive learning for young people, do you think that AI complicates that for a lot of young people? And perhaps do you even think that, AI is likely even going to worsen our job market as a country? Because many of the things that, we hire people to do, customer service, and things like that, AI is likely to replace them. If you're interfacing with, major e-commerce platforms now, it's not somebody behind the keypad who is responding. It's a technology that is, an AI-driven technology that is answering or responding to customers. Do you fear that AI is likely to worsen our unemployment crisis in Nigeria? And perhaps how do you think we can respond, to a world driven by AI at a policy level and perhaps, at a skill level for young people? Do they adapt and embrace AI? And what does government do at a policy level?
If anything, AI presents opportunities for Africa to accelerate its development and leapfrog. It's going to be much more easier to learn and curate knowledge with artificial intelligence. Manual and routine things are going to be taken away from learning.
How do people build this critical thinking element, this creativity? Because it sounds a bit abstract when you're telling people improve critical thinking or be a lot more creative. How does a young person leaving university knowing so well that the jobs of customer service is not likely to be available to him, and all I have to do is improve my critical thinking skills or my creativity? What path do they take to do that, to achieve that goal?
I think the first thing to look at will be our education itself. How do we move from regurgitating learning in theory to embedding critical thinking and problem solving as a philosophy of learning, right from even primary to secondary and even more at the core of tertiary education? Let me give you an example. If you're doing botany or biology and you are discussing photosynthesis, a teacher could frame a question and exam as define photosynthesis. And you could actually do what we call Kramanpoa, Gurubele, and score an A. But you might not be able to apply the learning to solve real life problems, either in horticulture or in agriculture. So if the question is framed like there's a plant that is stunted, after 4 days or 2 weeks of watering, the plant is not growing, what could be the problem? Apply your learning in horticulture to address the stunting of the growth of the plant. The student that comes out of that method of learning, solving problem, applied knowledge and applied science, is more likely to be a problem solver. And problem solving and critical thinking as a method. One of the important things for my learning is, it was when I got out of school that I discovered that thinking critically, there is a method. Problem solving has a method. Intuitively, we get our students to struggle with it. But when we teach it as a life skill, we will solve more problems, we'll be more creative. Our engineers will be better. We will connect engineering to arts. We'll connect arts to science. And we'll see new dimensions of innovation and software, machine learning that we have not imagined. And those are important things that we have to do. Embed critical thinking and problem solving, and that's something that the regulator of higher education have to really address. Preparing our students for the 22nd, 21st century is about embedding problem solving and critical thinking. Whatever subject you do, whether from history to science, that must be the heart of it.
I mean, what I didn't say in introduction when I was reading your stellar CV was that you have also now ended up in the academia, where you are academic director in Lagos Business School.
No, let me call academic director of the Lagos Business School Tech Leap Initiative. The technology programs of the business school.
School. Fantastic. So you're obviously in academia now. And which brings me to this very important question, because many people blame sort of the university education for the quality of graduates that we're producing today. But some others would also argue that the private sector are also not reinvesting in the university to determine the kinds of graduates that they want to serve them when they get out of the workplace. So it's a bit of a chicken and egg situation. Where do you think the correction has to begin? Is it in, rejigging the curriculum in universities, improving, the quality of faculty? How do we create some sort of a nexus between the academia and the private sector, where there is a match between the skills that are demanded by the private sector and what the universities are producing, and also to have a university that prefers solution to the problems that both society and business, faces. My experience when I was in business school here was that we're learning about, when we're doing case studies in business school, we're talking about the JP Morgans, we're talking about soft banks and all of that. And we're not doing case studies of businesses here, So, what has to change for us to solve those problems?
First, the gap between universities and industry has been too wide. There have been attempts to close it. People take initiatives at individual level. I think at the level of the regulator of university education, it has to become a core agenda. How do you bring, and it's not been talked about when you have higher education conferences. But what you don't have in those conferences, and I've attended a couple of them, actually the industry has been present. So the British Council, NUC, they have a whole lot of conferences. Have even presented a paper on these issues in some higher education conference in Hong Kong some years back. But you don't have industry present. So we have to close that gap. The kind of example of my coming to join academia as an adjunct faculty is a good example. Having worked at executive level in industry, and joining the faculty of the business school is the kind of things that we need to do more, not just in business, in engineering, in many other subjects and sciences, in public policy. If you're studying public policy and public administration, for example, in Nigeria, in the Nigerian universities today, how many permanent secretaries who are given the task of solving policy problems, actually teaching real-life cases about policy problems to our students in public administration, for example. You do not necessarily have to go to Kuru. What Kuru is trying to do should be a norm in every public administration department. And that's just an example. So that closing the gap, structurally closing the gap between university and academia is going to be very key in producing graduates that are relevant to the industry. And when we talk about industry, we have to go to the most dynamic part of industry. For example, when you talk about engineering, for example, the younger generation are much more in tune where the world is going than the engineers of my generation, sorry to say. So if, for example, you are just going to talk to engineers, you're not bringing the young guys who are doing UI, UX, software, machine learning into the conversation about what the curriculum of electronic engineering will be, you'll be missing something fundamental.
Oh, okay.
Yeah.
What's your take? What's your thought about university autonomy? That's always a debate, right? That universities should be somewhat autonomous and they should run themselves and perhaps charge market rates for their fees. And I'm talking about federal universities like IFE, Unilag, Bayero University and all of that. Do you think university education should be left to market forces, where public education is left to market forces, where universities can charge private sector rates for education, and those who cannot afford to pay those fees, are likely to go to technical colleges or, gain other kinds of education, and only those who can afford to pay a university fee or secure a loan to attend university should do that. And those who make that argument argue that then universities will have a lot of funding to be able to run its universities better, hire better faculty, and produce better graduates. Do you sort of, do you agree with that argument?
There's no linear answer to that question. We need both. We need private markets in education, in a society and a government that has fiscal constraint of resources. If there are demographics that can afford to pay commercial rates for education, we need to take them off public education so that they can go to private markets and pay those commercial rates. But education, especially public to investment in the youth, must be seen as a duty of the state. And there must be a safety net to protect talents whose parents might not be able to afford commercial education to also get at least a basic good quality tertiary, primary, and secondary education. So our public universities cannot be strictly commercial. Rates might go up, but there has to be a provision to enable people who cannot afford a safety net to also benefit from tertiary education. Else, we will lose all, like I said, we continue now. If we don't solve it, we continue to narrow the circle of prosperity. So we need those private markets, we need those private charges, private rates. But those who cannot afford, who have talents, the state must cover them. That's why we need the concept of market and the state working together for the development of society is very, very important. Let me mention this. We always look at the US side, American Bureau, when we talk about this. Let's look on the other side of China. China grew from a peasant society economy in 40 years to leading tech today in the world, overtaking Europe and now in a race with America. It did this by massive investment in its people. It didn't leave anyone behind. Every talent who had potential in China, who is Chinese, had the potential to get a PhD and become the best that it could be. That's what we see in China. If we absolutize this market, we might end up not. We should look at a mix of what West have done and the philosophy of China, which is don't leave anyone behind, especially those who have got talents.
Let's shift gears a bit, to talk about fintech, financial inclusion, and a bit of banking. And talking about finance, and this just, stumbled on this reading some of your papers and some of your arguments. You seem to have an aversion for betting, which has become pervasive in our society today. And there's the argument that, with betting at a toss of a coin, it helps people from, disadvantaged background to become multimillionaires. But you argue against that, saying that at a larger scale, it impoverishes the people, that the taxes that they pay to government doesn't make up for the damage that they do to society. Give us a broad view of your thoughts around this and how you think betting should be handled at a policy and regulatory level that is not detrimental to society and it doesn't damage, our young people who are seeking to escape, financial improvision, as it were.
Thank you for that question. Betting is supposed to be a game, but when a game begins to have unintended consequence of compounding poverty amongst the poor, we need to look at it beyond entertainment. Given the challenge that we have today in the economy, what you have today is a whole lot of young people who are given false hope by betting. The economics of betting there's no way everyone will make money. If everyone makes money and somebody has to be paid, by the time you pay taxes, pay for advertising, pay for the infrastructure, somebody is going to lose. And what we see are what we'll call emerging mental health epidemic among the poor who are given false hopes that they could make it by betting. And it's not just in Nigeria, across Africa. And our governments are prioritizing the taxes from betting and not look at the broader unintended consequences in mental health on young people who are completely being derailed by betting. So we need to look at how we regulate betting to make it more responsible. Who should play it? At what time should it be advertised? And some of those issues we should debate it, but we need to acknowledge. The reality of betting for me was a cousin that a distant cousin that I knew very well. How he took this gentleman, well brought up. He took a sales guy. He took his sales money, his company sales money, and he went to bet thinking he could make a quick money. And it just tells you how we need to do much more to protect our young people and how the betting industry needs to be more responsible, especially at this time when challenge of poverty is more pervasive, so that we do not exploit the poor and compound their poverty.
I guess it's a consequence of unemployment. People who can, find jobs or find decent jobs want a get-rich-quick path, sort of at the resort to betting. But talking about that, and this moves us into the conversation for banking, because we're talking about expanding opportunities for young people who want to do other things, which part of it is access to finance, and things like that. And I'm looking at the profits that were declared by banks in the last couple of weeks. It doesn't matter the economic downturn. Banks are turning out trillions and trillions in profits, while manufacturing concerns are suffering. Young people can't get access to finance and things like that. Do you worry that that's some sort of an anomaly where you have an economy that is sort of shrinking, struggling to create jobs, whereas on the other hand, banks and financial institutions are churning out profit, in trillions? Is that some sort of an anomaly, and how can that be corrected to fit the demand of our time, which is to create opportunities for young people?
It's an issue, but it needs to be framed properly. It's important that we let markets work. But when markets work, it should work in a way in which it works optimally for society and does not leave people behind. And you can achieve both. And those are the areas there are two ways to around how we regulate banking itself and the responsibility of the people in industry itself. And it's very interesting. Businesses that make $1 trillion profit. Let me give some statistics. In Nigeria, access to payments, according to FINA, access to research data, access to payment, we made progress in access to payment, digital payments, grew from 22% to 52% between 2010 and 2023. But access to credit in 13 years grew by a meager from 2% to 6%. 4% growth in access to credit in 13 years. That is an illustration of how the financial system is being disconnected with where people need services most. And we've got to fix that problem. It's not just an issue of the financial industry players. There are things that we have to do on the public infrastructure side, which I will talk about very quickly. But the first thing which some of the policy papers which have done, talked about, or supporting. We have a situation today where banks sit on top of data, customer information of millions of people they will never lend to, especially MSMEs. Banks only lend to maybe 10% of their base and corporate and commercial organizations. We need to move towards what is called an open banking regulation, where financial institutions are compelled to open their customer information to third parties who wants to lend to those who they will not lend to. A win-win partnership arrangement, not just to sit on those information, because especially fintechs who have the capability to develop smart algorithms to use alternative credit scoring to lend to those customers. If we do that, we have the potential to potentially expand access to credit through open banking. It's something which a regulator of financial system, financial services needs to push and make happen. In terms of ensuring that the banking system and the financial system is more relevant to more people in the areas of credit, and that's where the biggest impact in terms of tackling poverty will be. The other thing, of course, is the role of the state itself to supporting the financial industry players in terms of improving things like access to credit and making them more relevant. Let me give an example of India. India has what is called a digital public infrastructure system, in which everyone is registered on the universal identity system, which is the equivalent of our own NIN. On top of that digital identity system, you have the national payment system, which they call UPI. That's the equivalent of NIPS in Nigeria.
Yeah.
What it does is that everyone that has a digital identity, which is the first leg to come into the financial system, will automatically have a financial account, because the national payment layer, universal payment layer, and the national identity layer are coordinated as a digital public infrastructure. The tragedy or the challenge in Nigeria is that we have implemented these two systems as in silos, in a non-coordinated way, such that today the progress that we have made in terms of inclusive digital identity, we have not been able to translate into inclusive financial inclusion. Let me explain. Today we have, over the last 5-6 years, we've registered more than 50-60 million people who have come out with the national digital identity system. We now have 107 million Nigerians with national digital identity, but people with access to payment are just about 65 million. If we had a coordinated digital public infrastructure system between NIPS and NIMC, like we have in India, all those people who have digital identity will have had a financial account today. And those are the foundation that will support inclusive access to credit, because lenders will lend to those who they know will not run away with their money.
Yeah, sure.
So if people can run away with their money, lenders will not lend. So we have to create incentives through a national DPI, national digital policy, coordinated digital policy infrastructure for lending. And India has even gone further. They've now layered on top of, you have a UID, identity, UPI, payment. India has gone further to now have what is called universal lending infrastructure, a layer on top of the UPI. And with that, it's very easy for fintechs to innovate because the layer in terms of data is available. That's why some of the things we have to do to also support the financial industry players so that we improve access to credit and make banks more relevant to people.
For a lot of people, financial inclusion just sounds like one of those things that are, pushed and advanced by, Brentwood institutions, and something that is a bit alien to us. What really is this financial inclusion, really and truly, and how does that solve the problem, for access to credits that many people seem to be grappling with? And how does that transform the life of the trader in Aba, or the cattle rearer somewhere in Katsina, or the person who has just a small chemist or pharmaceutical store somewhere in Ibadan? What does financial inclusion do for them that radically transforms their life?
Financial inclusion, imagine that what it does, same thing with a telephone or a railway. When a railway passes through when a railway or a road passes through your village, your opportunities become expanded. You can travel further. When all that you do is as an economic man or woman is trade by cash, your circle of influence is the length of your hand. There are a lot of people today who are doing businesses in Moe, and they are sending what they produce, what they process to Kano, to Aba, and there are businesses in Aba who are selling to customers in Kano. Those are the things about giving the people expanded opportunity of being on the modern digital financial rail. It means expanded economic opportunities for more people. And so financial inclusion is not just financial inclusion as an end in itself. It's about the empowerment that it gives the ordinary person to participate in a wider economy and a wider opportunities for themselves and their families. And on the credit side, that's where the biggest impact is. In the financial system, when I don't know you, when I don't know where you live, when I don't know how you spend money, if I have two decisions to make. I don't lend to you, which is the typical default system currently, where access to credit is 6%, where it has grown only 4% in 13 years. Or if I must lend to you, I will declare you a big risk, and therefore I will price my risk like 250%.
I've always wanted to ask that question, right? And talking about price there, please don't lose your former train of thought. The way bankers price risk is funny to me, which is if I think that you're likely not to pay back or to default, it means you're a high risk customer, and that means I place a premium on the cost of capital to you. Now, it's funny because the moment you think I'm at high risk and then you're raising the cost of capital that I'm supposed to pay you back, isn't that a bit of an irony? Because if you think I'm going to run away, why are you making me pay more? In fact, I would argue that if you think I'm at risk, the cost of capital should actually be lower to give you the chance of getting your money back. It's a bit of an irony to me that the people who you consider riskier are the ones who you raise the cost of capital on, which likely raises their chances of defaulting.
Interesting contradiction, but it's perhaps, given what it is perhaps the only way financial system players can do. They have two options. Either they don't lend, or if they must lend, if the lending system will be sustainable, if I put in 100 million as capital for my lending business, if people don't pay back, I can only do one cycle of lending. So what the financial system will do is that if there's an 80% chance of default, you got to price that into your cost of risk for those segments. And so the way to tackle it is to address the concern about how do we make the financial system do lending more? How do we make financial system have more information on people they want to lend to, their credit, their payment behavior, where they live, and that's where the digital public infrastructure comes in. If this person takes money, would they go and open an account somewhere with a fintech or some organization somewhere outside the banking system that I will never be able to collect my money back? If we have a coordinated digital public infrastructure system from identity to payment that can track universally every citizen wherever they go, as India has done and has seen an explosion in inclusion and credit, lenders will have more confidence to lend. In fact, they will price risk much lower, because at that point, the MSME that they are pricing at 250% per annum, I mean, it's a very clever trick. It says like 20% per month. 20% per month is 240% per annum. 20% per month is actually like, they will call it like 2% a day. 2% a day, it looks like it's not a lot of money. 2% a day is 24% by 12. Yes. So it's huge for the MSME because there are no data. They don't know them, and the risk of collecting the money back is very high. So that's what we have to do to help the financial system. It's a public sector duty in the markets where it has worked. Brazil has done it in terms of what they call the Brazilian DPI. They call it Brazilian PIX. India has done it with Indian UPI. We need to follow the same model. Isolated digital public infrastructure systems, identity payments that are uncoordinated, we need to bring them back together and do much more. And
what seems to be the challenge? Because I know that our market, is largely informal. Our economy is largely informal. Right. A lot of people are trapped in the informal market. Is that the reason why inclusion has been difficult, to achieve? And what can we do to accelerate that and plug in more people? Because when people hear that the market is informal, they think that most people in the informal market do not have enough liquidity, but that's not the reality. There are so many people who operate in the informal market who have decent liquidity that, if captured, in financial systems and all of that, will add tremendous value in terms of general liquidity that can actually even go to borrowing and things like that. But why do we have a lot of people still trapped in the informal sector, which also makes it difficult for us to achieve as much financial inclusion as we would like?
I think first we must commend our regulators and a lot of players in the financial system, banks, fintechs. We made a lot of progress. 9 years ago, access to digital payment used to be 2012. I give an example. 2012 was just 22%. Today we are 52%. We've made a lot of progress in those areas. Financial inclusion has grown. It's now 64% for more financial inclusion. Where we have challenges are in certain geographies in Nigeria. For example, in the north, where financial exclusion, for example, is like 70% in some states. People who are not on the formal financial system. And because of the population of the north, if we don't fix financial inclusion issues in northern Nigeria, where a whole lot of agricultural products are coming from, we will not be able to solve the financial inclusion problem of Nigeria. So one of the things I was talking about is the gap between those who have identity and those who are who have financial accounts today. Yeah. According to EFINA data, EFINA that does access to finance research on the national level, 28 million Nigerians today have NIN who do not have financial accounts.
28 million?
Yeah, 28 million. That is huge. And that's a product of the fact that we didn't coordinate national payment layer and national identity layer that should have automatically translated into each other. One of the things I believe that we need to do is getting the regulator to lead a project to find these 28 million people who are already one leg into the financial system. We know them, we know their numbers, we know their address, and work with banks, fintechs, and the telcos to bring these 28 million people into the formal financial system. If we do that, we will accelerate financial inclusion from current 65 million to about 100 million in a few years. But it needs the will and the coordination to recognize that these 28 million people are in our face. Where are they? And they are the people who are most likely to be they are like to be in the north. They are like to be in the informal sector that you're talking about. People who have access to financial accounts will use it if it is convenient. As we now see that a whole lot of people are paying with pay by transfer. They will use the OPs of this world. Even a Malan who is selling purple will put his OP account or money point account on the or paste it. So they will use it if it's convenient and if they're on the financial rate. So that's what we have to do to solve the problem of the informal sector, bringing them to the formal financial system.
So it sounds like we're having to innovate. So many people have argued that the fintechs are already operating in a saturated market. It doesn't seem like you believe that the market is saturated for fintechs, and there's still a lot of grounds for them to explore. Do you think that there's still a lot of ground to explore, even though it appears that the fintech market in Nigeria is a bit saturated? Do you think there are other opportunities? Because now you're talking about the fact that there seem to be some sort of untapped grounds, especially in northern Nigeria, where there are a lot of people trapped outside the financial system.
Yes and no. It depends on where you look. There are sectors in fintech that have become very competitive with several players, where offerings have even become generic and commoditized. And in those sectors, or sections in fintech or the financial realm, you are likely to have a competitive shakeout over time and consolidation, because if you don't have skill in tech, you are not likely to make it. And in most of those sectors, so if you are number 3 or 4 or number 4 or 5, it's unlikely that they will make it over time. But there's still a whole lot of other spaces where there are significant opportunities where we have not solved the problem. So I kept talking about access to credit, for example, where access to credit as of 2023 was just 6%. We need smart innovation in tech to solve the problem of exclusion of a lot of our MSMEs in terms of access to credit. If you look at insurance, insurtech, look at pension tech, savings tech, investment tech, there's still a whole lot, both within those who have financial accounts today and those who do not have, that needs to be, that are huge opportunities. So it's a question about being specific. Let me say it's true that there's a whole lot of survival bias in tech. We talk a lot about the successes. We don't talk about the failures. We don't talk about for every paystack, OP, and money point out there are probably many, 10, 15 others who didn't make it. So we have to commend a whole lot of investors and funders and managers of the tech businesses who are doing a lot to solve problems. But truly, it depends on where you look. So the answer to that question depends. It depends on where you look. Yeah.
Nigeria clearly has an unemployment crisis. A lot of young people don't have jobs. A lot of people are struggling to survive. Like you rightfully said earlier, the ladder has been pulled underneath them. What is the one big policy that you think can set us on a path of creating jobs, meaningful jobs, decent paying jobs for young people that helps them climb the social ladder in Nigeria today?
First, I think we need to recognize how we shoot ourselves in the leg. The last 10 years plus, about a decade ago, we made a whole lot of progress in the Obasanjo years through sound market-driven economic reforms. The economy was growing at 7%. When you drive on Tomiland Bridge in those days, you see a whole lot of new cars. We expanded the middle class. By the kind of things we've done in the last decade, non-market-driven economic policies, we killed the industries that would have employed people. We killed manufacturing. But when people cannot get effects, so the first thing is, let us commit as an elite group to continue the progress of economic reforms that we're doing, but ensuring that we make it relevant to address the pain of the poor who have had to be the biggest disproportionate brunt of the pain of economic reforms. Then we have to invest in our young people. That's why the question about, is it just commercial markets for education or not? Invest massively in public education and vocational education and vocationalized tech, such that even from secondary school, you could learn specific test skills. If you don't want to go to university, just like the way you could learn carpentry or plumbing, or you can learn the same with tech and let people create jobs for themselves. The other one, of course, is industrialization. We do not have a clear industrial policy. What are we driving? And are we supporting specific industries we have elected to support? Agriculture, so we can keep going on. This is a big question that...
Yeah. I mean, I think this is a wonderful place to leave the conversation. It's been really, really enlightening and enriching speaking to you this afternoon. And I'm sure that everyone who's listening in this conversation have learned something and have truly, had their 1 hour well spent. It's been great talking to you, Mr. Olu Akanmu. It's a pleasure having you on the show, and I hope that we can do this again sometime soon. Thank you for coming and sharing your Sunday with us. But, as I would be doing on this show every Sunday before I go, I'm not sure I want to even let the bag out on who our guest will be next Sunday. I'm sure during the week we'll let that out of the bag. But one more thing before I go. During the week, I think it was on Friday, the NSA had his hillocks stolen right outside the Friday mosque. He came out of the mosque and couldn't find his hillocks. Now, you have to ask the question, when the national security advisor of a country loses his hillocks just right outside the mosque, you have to wonder what kind of protection and security ordinary citizens like us have. And the truth is, like I always say, when senior government officials are much more concerned about the image of their principal or the image of the administration as against the dignity of life and the welfare of ordinary citizens, what you have is a system that perpetuates violence, and the insecurity that we grapple with would hardly be solved. So food for thought, and I'll see you again next week, Sunday. Thank you for spending your time with us, and I'll be back on Sunday next week.
And that's it on The Discourse.